Good morning. It's Jeffrey Christian, CPM Group. It's Tuesday, the 6th of December, St. Nicholas Day, and runoff election day in Georgia. I wanted to talk today about silver, some of the topics that are kicking around in the internet and in the markets. Total inventories, Comex open interest versus deliveries, London inventories versus compared to UK exports of silver. And then some discussion about the consensus silver and gold price projections for the next few years. So bear with me. The first thing is total inventories. These are total inventories, and you can see, a significant portion of it is implied or estimated unreported inventories held by investors. They have always been the bulk of silver inventories, at least going back to 1970, and reality going back even further. Coinage has become much more important. These are mostly bullion coins. They do not include non-official coins. These are official coins only. Medallions and rounds produced by non-governmental mints that are not official coins are included in that implied unreported stocks. But the reality is that you have enormous amounts of silver in bullion and coin form around the world, close to record levels, if not at record levels. So the world's not running out of physical refined silver. It's just that many investors who own that stuff want to keep it. My next point, talking about Comex investors' open interest relative to deliveries. We have gone through a period where some of the silver promoters on the internet were talking about how all of the remaining inventories of 33 million ounces a week ago of registered inventories on the Comex would be taken delivery of with the December futures contract when first delivery occurred last week. In fact, inventories rose about 3 million ounces to about 36 million ounces registered, and total inventories, including unreported or unregistered but eligible inventories, remain relatively high. The key is to understand that silver futures investors are buying price exposure to the price of silver, not physical metal. And most of them don't want physical metal, they want price exposure. So the real key metric is looking at open interest relative to deliveries. And you can see deliveries are a fraction of open interest. Also of interest is the extent to which open interest rose very sharply from 2008 or so to 2019. And really, as the price of silver has been rising since 2018, 2019, open interest has declined sharply. There's about 631 million ounces of open interest on all of the Comex contracts as of yesterday. And the vast majority of that is in the March contract, and it will roll forward in late February. That's the way the market works. You can see here, it's very important, the deliveries remain relatively low throughout time, going back to 1988. This is one of the key metrics to pay attention to understand that ratio. And I'll show you the ratio in a second. And to understand that most people in the futures market really are buying price exposure, and they really don't want to put up 100% of the value of the equivalent physical metal and take delivery of that physical metal. This is the same data just as a percentage. So the percentage of Comex silver futures deliveries as a percentage of total open interest. You can see it's very low, less than 10% most of the time since around 2000. It was a little bit higher in the late 80s and early 90s when you still had photographic companies, electronic silver paste manufacturers, some electronics companies and jewelry companies taking delivery of their physical silver for manufacturing purposes through the Comex. Those practices were more common in the 70s. They dissipated over the course of the 80s and 90s. And really, since 2000 or so, you've seen significantly lower percentage of open interest actually being taken delivery of. And again, those are deliveries of warehouse receipts. A lot of times the silver stays in the warehouses, especially if it's not being taken out of the warehouses by manufacturers. Next thing I wanted to show you and talk about is London inventories and UK exports. These are London reported inventories. London only started reporting these things in the middle of 2016. And we saw inventories rise from 950 million ounces to about 1.7 million ounces, 1.8 billion ounces. I'm sorry, 1.18 billion ounces. And since late 2021, they have declined sharply, about 300 million ounces. And what we wanted to do is we wanted to look at the inventory reductions relative to UK exports. And we only took it January through August of this year. The inventories only the export data is only available through August at present. We'll see September, October in a few months. So we looked at the gross exports of silver out of the United Kingdom and the net exports, so gross exports less gross imports, net exports. And then we compared that to the changes in UK inventories. And we inverted the scale for the London inventories. It's the right-hand scale. It's negative 70 at the top and negative 10. But you can see a pretty close fit. The orange data are gross exports. Blue is net. And the gray are changes, reductions really, every month in UK or London depositories. And you can see that a significant portion of that silver that was taken out of London depositories has been exported from the UK. A lot of it to India, a lot of it to other countries, a lot of it to the United States and Canada. It's showing up in the trade data as imports into Canada because for logistical reasons, the metal is being shipped primarily into Canada and then trucked down into the United States. We gathered a whole lot more data and we'll be doing more work on this in the weeks and months ahead. But I thought that this was pretty interesting because it does confirm the idea that a lot of the silver that's come out of the London inventories has gone overseas. And we'll look into that more. The final thing I wanted to talk about were real market gold and silver price expectations. You always have the promoters and the bugs and other strange people who are saying, the price of gold and the price of silver didn't rise to $10,000 and $750 this year the way I had said they would this year and last year and for every year that I've been in the business. But they will next year. So you're hearing various people with their prognostications for gold and silver next year. Well, next year, the Fed's market's going to collapse and the Fed's going to have to lower interest rates and we're going to go into a recession and China's going to collapse and Russia's going to collapse and all kinds of stuff that really just doesn't stand up to logic and scrutiny. And the price of gold going to $10,000 or $30,000 and silver's going to $750 or maybe $1,000. And so what we did is we went to Bloomberg, which surveys maybe more than a dozen banks and brokerage houses and other groups that and says, what do you think your quarterly average and annual average prices for gold and silver are going to be over the next several quarters and the next several years? I will say CPM Group does not participate in this Bloomberg survey, and that the people who do participate oftentimes tend to be trend followers. So if the price of gold is rising, they will have higher prices projected. And if the price of gold's falling, they'll have lower prices. And if the price of gold is treading water, they will have prices going sideways. The median price projections for gold, top line here, 1806 for this year. This is probably about right where it's going to be. It might be a little bit under 1800 because of recent weakness and current weakness. But they have it 1830 next year, 1800, and then falling in 2025, 2026. CPM Group, I think, has it the other way around. We have it pretty flat in 2023 and 2024, but when we have higher prices in 2025 and 2026, because we do think that there'll be a recession and there'll be a variety of other political and economic and financial market issues that will cause investors to sort of refocus their desire to have more gold rather than less gold. But the average, the median of mainstream real market analysts is that the prices will be pretty much flat for the next 2 years and then lower. Silver, pretty much the same thing, more weakness. They're projecting around 2159 for this year, going down to around 2090 next year, 2150, 2024, and 2270, 2325. So rising a little bit in 2025 and 2026 in contrast to gold. Interesting. And then, the highs, you can see someone who was projecting $2,000 for this year and hasn't changed his projections, is talking about 2,100 next year, 2,150. Yeah, and then the low end of the gold projections is 1,650 going to 1,600. And silver, actually the high end is relatively low, 23, 24. Mainstream analysts are not necessarily thinking that the price of silver is going to hit $750 anytime soon, or even $50. And on the low end, pretty much about the same. Some weakness in 2023, but then again, strengthening over the next 3 years. That's really all I've got for you today. And you can always go to our website and read more about some of our research and buy some of our research, the yearbooks, our research retail investment program, our precious metals advisory, our base metals advisory. You can read all about that at our website, cpmgroup.com. Until then, take care of yourself, take care of those around you, and we will be talking to you soon.